Welcome to MarketBuzz on ForexTV.com. It's Thursday, February 12th. I'm Tim Kelly. Equity markets are down in the U.S. and Europe, following large losses overnight in Asia. Dollar is marginally higher. Now for a quick check of today's headlines from the CEP news desk. Trip to the mall doesn't boost optimism, according to economists who are reluctant to call today's surprisingly positive retail sales report good news for the U.S. economy. While positive analysts are reluctant to call this last data point a recovery, as it is only one positive footnote in a sea of bad retail data, and many economists who are quick to admit positive sales across a range of retail sectors is good news, but is not a clear recovery sign. Overall, retail sales rose 1% in January, the first increase in 7 months, against expectations for a 0.8% drop. Ex-autos sales grew 0.9% against forecast for a 0.4% fall. While economists were expecting the jump in gas sales, the climb in sales of cars, electronics, clothes, and restaurants was unanticipated. Major reason for the skepticism continuing is the continuing deterioration in the employment situation. First-time claims for unemployment benefits in the U.S. came in above estimates in the week ending January and February 7th, easing slightly from the 27-year high reached last week. Initial claims fell back to 623,000 in the week, following an upwardly revised 631,000 claims in the prior week, that according to the Department of Labor. Claims were forecast to come in at 610,000. An economic stimulus bill is headed for passage in Congress by the end of this week after lawmakers agreed on a $789 billion plan that aims to stem the recession through a mix of government spending and tax cuts. The House will likely vote tomorrow on the bill, that according to Brendan Daly, a spokesperson for Speaker Nancy Pelosi, a California Democrat. A Senate vote could come tonight, though it is more likely tomorrow or February 14th, according to a spokesman for Senate Majority Whip Richard Durbin, an Illinois Democrat. Today we're joined by Dustin Reid, currency strategist at ABN AMRO. Dustin, thanks for joining us today.
Hi, good afternoon.
Dustin, I started off the report by saying there's some skepticism in the market over the retail numbers, mainly due to the fact that there are less folks out there with money, less folks out there with jobs to buy all these wonderful things that we sell. What's your take?
It doesn't really, go with the anecdotal evidence of what we saw from retailers, major retailers, and same-store sales for January when you compare the retail sales numbers we got this morning from the government. I'm a bit surprised at the number. I think obviously a lot of market economists on the street are also quite surprised, given the consensus, I believe, of an 0.8 decline expected for the month, and the uptick of 1% on the month, which is what the result was. Interestingly, back in November we had a stronger than expected print as well, and that obviously didn't necessarily jive with the with what we were seeing anecdotally, and lo and behold, over the next couple of months we saw that number get revised lower in January, etc. So I think that there's room for this number to get revised lower over the next couple of months, and it's just very curious why the data was higher than expected, but bottom line, I expect it to get revised lower in the coming months to be more in line with what I think people, both on Wall Street as well as on Main Street are thinking about the economy.
Okay, Dustin, the U.S. equities are lower by the Dow's down 130 points off and the S&P down about 10. They're off their session lows, but seemingly we're a little bit heavy here due to the uncertainty about the stimulus package and Timothy Geithner's package as well. But can you tell us what to expect here for let's call it the G3 currencies here in the next week?
Sure, and I would agree. I mean, equities feel very heavy here and have traded heavy since earlier this week after Geithner's speech was generally taken not too well by markets in terms of lack of a focus in terms of a concrete action plan. I typically look a little bit more at the S&P than the Dow, and put out some commentary to clients this morning that when we were trading closer to the session lows around 8:15 on the index, we were approaching some levels that were becoming interesting. There are 4 or 5 closes around that level between between 800 and 816, call it, that provide, I think, some resistance where the market may be looking, for some support. But if we break through those support closing levels, then we could be headed lower. And on the FX side, what makes that very interesting is that there's been an incredibly tight correlation between equities and equities being a function or a proxy of risk appetite versus the U.S. dollar index and the G3 currencies. And what we've seen is when the S&P sells off, the dollar is generally stronger, and when the S&P is bid, the dollar is generally weaker. So if we do see a fall through, call it the 800 level, and a material close, and that close actually holds going forward, I think we could be at the beginning of a pretty significant dollar rally over the next week or so, especially against the euro. The dollar-yen story is a bit more complicated, given the BOJ's verbal commitment to intervene in currency markets. They haven't mentioned levels, but most people in the market expect them to intervene somewhere between dollar-yen 85 and 87. And since they've come out, the BOJ's come out, dollar-yen's been very sticky, has actually traded back above 90. So at this point, dollar-yen's a little more of a difficult call. Difficult call. Although I can see it trading lower, but I can easily see euro dollar trading back below 125 over the coming weeks, especially if S&Ps and equities in general sell off.
And Dustin, I guess that would bode ill for the risk currencies and the high yielders as well.
Yeah, you're absolutely right. I think if such a move were to happen that I was just mentioning before, I think you'd also see a significant sell-off in Aussie, in New Zealand. Canada probably also would be a lagger in that situation. And in the local market space, clearly there's going to be some downside pressure on Brazil and on Mexico, and the Eastern European currencies as well, which apparently have quite a bit of exposure to a Russian devaluation and Russian assets in general. So, yeah, local market currencies are definitely not where you want to be, over the short term. There appears to be a lot of heaviness in the local market currencies at this time.
Dustin, I want to go back to this BOJ intervention issue. Just the mere mention of it has folks worried when we get down to those levels, certainly under 90 on dollar-yen. The past attempts have worked. Is this something that the BOJ might, at this point in time, considering the global situation, might be running uphill or into the wind? Use any term to describe it, but is there a chance that an intervention might just blow up in their face here at this point?
I mean, it's possible. The size of the FX market is so large, as most people know, with the last BIS survey, which admittedly is a couple years old now, almost well over $3 trillion US a day in turnover. But regardless, the BOJ has a sizable foreign reserve portfolio, well above 700 billion, and they could make a pretty significant stand if they want to, and hold dollar-yen at a certain level, or at least in a certain range for a certain period of time. But markets, historically, it's interesting because markets tend to want to test the central banks after they verbally intervene and say that we're actually going to do this and intervene directly. But the market hasn't necessarily tested it yet, so I think the market's really giving the BOJ a lot of credibility in terms of the size of its balance sheet and its ability to stabilize markets. So it's definitely an important theme for the rest of the quarter and probably for the rest of the half going into the summer. Whether if we see dollar-yen, I would say below 87, then I think you start to run the risk of significant probability of BOJ intervention. I think there's a little bit of room here just below 90, kind of call it between 88 and 90, but once you kind of hit 85, 87, I think you're going to have the Japanese exporters screaming for something to be done.
Well, that's great. Thanks for the information, and thanks for joining us today, Dustin.
Thanks very much.
This has been your New York Forex Market Buzz. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.